This is a great follow-up to Friday's discussion where this is the move that changes everything. Triggered follow-through on Monday as the S&P futures broke above 58.30. So an obvious question would be, okay, Rag, what gives? I mean, why are we selling off here? There's a lot of Fed speak this week. There's obviously TikTok. We're closing in on the elections. There's a lot of reason for this breakout to maybe move to the upside a whole lot slower than maybe we would want it to. But there are ways to do it, and I'm going to walk you through. So I haven't done a video in a free video where I walk you through the pieces of what's on my chart to show you why I want to do what I want to do. And I think if this is your first time watching one of these videos, great. If it's not, this might fill in a lot of the uncertainty about, Rag, I understand what you're telling me to do, but I don't quite understand why that's what you're choosing to do. Let's get into it. So first of all, the candles are all green. If the candles are green, I'm looking at a long position only. It could be long the S&P, it could be long the MES, or it could be long SPY calls. So I'm bullish, right? Green means go higher. I also know that right now I'm 3 sessions in, 1, 2, 3 sessions in to not only bullish momentum, but a bullish trend. And any of the previous structure was either an uptrend or bullish momentum. And that's been since the 23rd of September. So almost a month. This has been either bullish chop, or in this case, bullish consolidation. This is a pretty narrow range here. Bullish consolidation, or now we've got this bit of a trend like we did back at the end of September. I don't want to be getting long puts. I don't want to be picking tops. Why do I not want to be doing that? Well, green candles, green trend. That's just 2 of the indicators that are helping me determine the direction. Another thing is we're above this indicator that I endearingly call the equator. Anytime I'm above these white dots, I'm going to call this being in the bullish hemisphere. And yes, I'd rather be long in the bullish hemisphere. So that's also in play. Then the last piece is, all right, Ron, we've got the directional bias. We understand you want to be long. We can see what's on your chart telling you you want to be long. So where do we get long from? And that last piece is right in here, this gray zone, or these 3 lines. There are 2 different things. One is a volatility-based zone of support called the daily price movement range. The other, this lower one, is the 3 lines, hence a zone, of a mean reversion. Okay? In other words, buy the dip, right? A mean reversion is just a multi-syllabic way of saying buy the dip. And I only want to be buying the dip, buying the pullback, buying the retracement, right? Within the context of an uptrend. So these 3 lines, you can see how they disappear from time to time. They disappear because if the trend goes neutral, there's no validity for buying the dip. There's no validity for buying the dip if there's no trend. So these speak to each other, so to speak. No trend, no mean reversion. Those are the 2 things. Today you can see S&P is sinking into that gray zone, and that gray zone opens the door to ES, MES calls, or the futures themselves. It also opens the door to the SPY. So this is the next thing we do, which is if I have the opportunity to buy futures contracts, if I have the opportunity to buy the options on the futures contracts, I also could buy calls on the SPY. I can also buy calls on the ETF. And that's another thing that we keep in mind. So when the S&P futures are in that zone, one of the things we can do, choose your own adventure, is I can buy calls in the SPY. And these are one of the alerts we sent out in the Sector Secrets Mastery today. So For those of you that have been watching, yeah, Raghee's bullish, what else is new? Rather than talking about that again, let's talk about this within the context of the breakout and the zones that we are working with right now, which is the uptrend within the context of a pullback to the daily price movement range in the bullish hemisphere, in obviously the uptrend with green candles. That's where my confidence comes from. And every one of these tools is designed to measure price and momentum and participation and trend, support, and resistance. So the more that I can automate like this, based on a process that I've been testing for, in some cases, longer than 20 and 30 years, to processes that we've fine-tuned over the course of testing for as much as a year and a half, when I trust the process as much as I do, and then I can automate that process, then analysis becomes really quick and easy. And that's what I'm looking at on the S&P today. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.